Hi, this is Jack from Alpha Charts with an experiment week 7 update. Today is July 19th, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to the channel. It really does help me out. Thank you. All right, so week 7 is in the books, right? And this will be a fairly short update. And just a reminder, what I'm doing here is a hypothetical account, trying to prove or disprove certain things. One of them is if holding longer term versus jumping in and out of stock is more beneficial, which you know, my hypothesis is that it probably will be, but I need some hard evidence to prove it. Also, to make sure that my universe of stocks is correct, and basically how I'm going through and picking stocks. So that'll prove or disprove that. The other thing is, in this experiment, I have a 10% maximum drawdown, and that is actually one of the biggest things that I'm looking at. Is it a max of 10%? Is that the right percentage? Should that be higher or lower? Also, should it be a trailing stop, or should it be or should it be from the original purchase price? So we'll see. I'm going to do a bunch of analytics at the end of week 12. We're only in week 7 right now, but every 4 weeks I am taking I am doing the percentage change and comparing it to the big averages, SPY, QQQ, and IWM. So we are week 7. These are updated numbers on this side too. And Monday was a really rough day for growth stocks, which, as you can see, are the kind of stocks that I tend to look at. So there's a lot of give back this week. And as you can see, we now have 15 are still green. We have 4 that are yellow, so 75% green, 20% yellow, and Everbridge went back to red again. So it is below my stop. Yellow means that it's between my buy price and my stop, so I'm negative on these stocks. And if it's green, then it is a positive stock, right? Greater than my price of entry. So as you can see, Everbridge has been a dog ever since I bought it. Again, and one more thing. This week 1 buy was June 1st, and it was indiscriminate, which means that if it was extended, but it still fits within my universe, I would still buy it. So that just as an aside there. So that's the one variable here too that is not controlled, is there's no such thing as a perfect entry price. So I just bought indiscriminately if it fit the criteria that I was looking for. All right, but Everbridge has been a dog. IFI or INFI is not really performed to what we're hoping for, even though I still love that stock. So those were the 2, we'll call them dogs. And even these that turned yellow quickly, after 2 weeks, after 3 weeks, right? Maybe there needs to be some kind of rule that if it's not really taken off after, 2 or 3 weeks, that we take a look at those 2. But we'll see. I mean, you see, like Medallia only was green 1 time last week, even though it's close. Ring Central, it was green and then came back down to be negative or yellow again now. So again, that's looking at that 10% move. And let's just look at the chart real fast. Do that, and let me here. This is a weekly, so let's just go to daily. I wanted to show you. So this was Monday right here, right? 13th. Let's make sure. Yeah, Monday the 13th, right there. Big nasty red day. That QQQ was down 2%, which is huge. Now the nice thing is the next day, look at this volume bar right here. That volume bar right there shows that the buyers came back in my opinion. So I am still very bullish, as you know from my state of the market video. That looks really, really good. But when you look at some of these stocks that I'm in, the market was down 2%, right? The Qs were down 2%. But when you look at something like Square, one of my best leaders, it was down 7%, right? That's a lot of give back in a week. But that's why I'm looking at this end of week, because I'm trying to avoid that type of volatility. I mean, look at TTD. Let's look at this one. Right? So this one, the give back was, again, 7%. Huge, huge give backs on Monday. And right now, just, marking time as the way I look at it. Still very constructive. Some distribution on here, which isn't lovely, but we'll see. We're going to see where it ends up. Now looking back over here, and you can see that the give back, I'm only up 13.8% in this particular portfolio, and the Qs have almost caught up to it at 11.17. Still, we'll call it 2.5% over the Qs, which is not bad, and definitely beating the SPY and the IWM. But that give back on Monday was serious and significant to the growth names. And actually, I just want to see SPY growth. What did that do on Monday? Only 1.62 SPY growth. Okay. But I don't trade or really use SPY growth as my barometer. I'm using the Qs. So this give back was serious. Growth names, I think there's levels of support that before I would get bearish and call this maybe a head and shoulders top, right? That's a possibility, but it would then have to break below this 235-ish area, and that would be a different story. But that's all I got really. Next week will be the big week. It's a week 8. And then we'll be into the final stretch, the final 4 weeks of this. And then again, I'm going to do my best to break down each one of these and try to figure out what the best way of risk management is in a portfolio like this. I hope you all enjoy this video. Check out my other ones if you get a chance. I do a stocks to watch. I do a state of the market video. I do this experiment video. I started a new series called The Long View, which is all weekly or greater charts. And stocks to watch, I do every couple of weeks, and I basically share my watch list with y'all. All right. So again, thank you very much. You can catch me on Twitter at AlphaCharts365. Hope you all have a great day.